What I have faith in is not predictions. What I have faith in is that the people that I know and trust will figure it out. And if you're sitting around waiting on the market to change, it'll keep changing. And you just got to have faith that you'll figure it out. And that's
Yeah.
what I found has worked for me over the years.
Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. We got Matt Faircloth again. One of my favorite dudes. I have modeled some of my career after Matt. I've been following him on Bigger Pockets for years, and he almost doesn't need an introduction. But back for the second time, my buddy, Matt Faircloth. He has been a full-time real estate investor since 2005. In that time, he has successfully completed projects involving dozens of fix and flips, office buildings, single-family homes, and apartment buildings. He controls thousands of units in multifamily in partnership with tens of millions of passive investor equity. He is a regular contributor and podcast guest on biggerpockets.com. He has a very active YouTube channel, which I highly suggest you check out. It's dedicated to educating investors, and he's the author of the Amazon bestseller, Raising Private Capital: How to Build Your Real Estate Empire with Other People's Money. You know, when you mention other people's money, you want to do it legally, safe, clean, and you want to provide a great return. That's what my podcast is all about. Whether you're a first-time investor, buying your first single family, you want to have a good return, you want to have the right underwriting. I just had a podcast dedicated solely to underwriting, and it's important that you do your homework. Matt does. He's been very successful, and he shares a lot of current information that we need to know. Rates are up, inflation's crazy, job employment is still rising. The Fed is very confused about what's going on. That's a lot of the articles I'm reading. And it's important to talk to people like Matt and some of the folks I have on the program right now about how to adjust your investment criteria or what your hedges are for the future in this business, whatever asset class or however you work in real estate. I wish you the best. We're on iTunes, Spotify, Stitcher, Google Play, iHeartRadio. Check out rei.mba when you get a chance. Enjoy the interview. Cheers. We're here with Matt Faircloth, the one and only. Thank you for being back on the show. I caught him drinking water. Look, Matt is all over the place. One of the best in the industry. Everybody knows him nationally. And Matt, you've recently done a lot more with Bigger Pockets. That's one of the ways that
Those are my people, man. Yeah, I've been enjoying working with them. It's a symbiotic, love relationship we have for each other. And first of all, as I was drinking water, so didn't get a chance to say thank you for having me back again. It's good to see you.
For sure. I'm happy you can make the time for me. I know you're a busy man, but let's have some fun. Yeah, let's get right into it. So, I don't want to go through a lot of your history. We kind of did that on the last show. Everybody who's listening, we have a good interview from before. For those who don't know you, give me the high level real quick.
Lover of helping people find another way to do things. That's me. I love to help my investors find a way to build their wealth. I like to help those that are learning from us through things like you mentioned, the Bigger Pockets Bootcamp, find a different way to build a career for themselves and to make investments on their own and live life on their own terms. And those are those that learn from us and those that invest with us. So that's what I do, is to help people do things different.
And you've done it very successfully for a very long time. For those, I think everybody knows, I manage a fund. We're like the underdogs. We're slowly growing. I want to become like Matt one day. But it is the whole concept of like, hey, real estate is still flowing. Everyone's still talking about it. We have some really good prospects coming up. It's January and everybody is looking for Q2, Q3, some proverbial blood on the streets. Um, for yeah, so I just want to cut right into it because you see things from a totally different angle. You talk to so many
Yeah.
different people. Hit me with what's going on right now.
Sure. So I was around, as you can tell from the gray hair, I was around in 2008, 2009 when the market, when the residential housing market and multifamily to a degree, took a dip back then, right? And hit the crash and all that kind of stuff, right? There was not blood in the streets right away. A lot of people did have foreclosures, a lot of losses, but the only in 2008, 2009, if you were going to do a deal, you were typically doing it through a short sale, right? Meaning like I want to buy that property for 100K, and the seller owes $300,000. I'm going to try and get them to sell. I'm going to try and get their bank to agree to sell it short. If you're going to do a deal, it was short, and there was like these short sellers left and right, and then the lawyers got in on it, and everybody started doing all these short sales, and it was like a big thing. It was, that's what wholesalers had to do to make a deal happen, right? And the reason why they had to do that is because the banks it takes a while for a pig to work its way through a python, right? And so it took a while for those bad mortgages to work their way through the banks, right? And so you didn't see banks selling REO, real estate owned stuff that they had foreclosed and then put on the market, right? You didn't see that till like 2010, 11, 12, right? They started to flood the market with the stuff. And so that was like the feeding frenzy from the banks. But before that, it was short sales working with sellers direct, right?
Yeah, thank you.
My point of telling you this story, Tejas, is that if there is a multifamily correction, you will not see it in 2003 or maybe even four. You might see it in late 2024, right? But I think what you're more likely going to see is sellers that are more realistic on what they're asking for their properties. Sellers that have mortgages that are coming due and they thought they could sell for the sun, the moon, the stars, and for a 3.2% capitalization rate, but they can't do that anymore because the market's just not there. And they also realize that, okay, I could a year ago have refied at 3% interest rate, but now my refi rate is going to be 6.2, and so now a sale might make more fiscal sense. And there are going to be a few distressed owners, but I don't think that you got a blood in the streets equation. The debt market is different now. Just because what happened in 2008 happened, people think that's going to happen every 10 years. It doesn't. If you look at the prices of real estate, it just does not. Real estate does not crash every 10 years, right? That's not like maybe the stock market does, but real estate certainly doesn't. Real estate kind of plateaus. If you chart out real estate over the last 50 years, you will see plateaus in real estate pricings and a few dips caused by Wall Street based, financial back stuff that dragged it down. But I don't believe, Tejas, you're going to see a crash. What you are going to see is a little bit of realism, a little bit of cold water.
That's a nice way to put it,
right? And the party needs to slow down a little bit, maybe a 10 to 15% reality check,
totally.
And maybe sellers and buyers both gain a little bit of control. We're bidding stuff right now at DeRosa, and the buyers for the first time actually have a say in the conversation. We're bidding a deal right now. The sellers want us to do money hard, meaning like money non-refundable day one. We're not going to do it because they're not showing us enough of the property, and I'm not going to put money at risk like that on a deal. A year ago, the only way to even get their attention was to go money hard day one. Now, money hard day one is starting to dissolve, starting to go away. And as much as sellers, they're kind of the last ones to get the memo. The things have changed. Really, brokers are the last ones to get the memo. That things have changed in that. But
let me pause you. Can you go back like
what? I'm off on my riff there. Man.
No. I want the whole riff, and I don't want to interrupt you. Just real quick, bidding. Just people. Some people are like afraid, scared. Some folks don't understand the process of like trying to put in an offer at a certain number and things like that. So, what are you bidding on? Where, real quick? How large, if you don't mind sharing that, and then
sure.
we get back into it.
We are very geographically focused as a company, and anybody that I teach through BP or through our own private stuff, I tell out of the gate that you got to pick a market. Like Tejas is investing in the Lehigh Valley. That's it. So you approach Tejas with a deal in Austin, Texas, you can say that's an awesome deal. I'll call my friend who might want that. But if it's a Lehigh Valley deal, I'll take it.
Thank you.
And we have chosen the Piedmont Triad in North Carolina as one of our markets. And so we are pushing hard into the Piedmont Triad, which is Greensboro, Winston-Salem, and High Point.
Nice.
And a few other pocket markets in the Carolinas, but certainly not everywhere. So that's where we're bidding because it's a bit more remote from us and for us, and because we've got pretty good capital raising capacity and strategies in that we typically buy stuff that's 100 units or above in those markets. So that's the beginning of there's a lot more parameters that we have, but the beginning of the conversation is in a market that we are targeting and 100 units and up for where DeRosa Group's at.
So yeah, go right back into it then. So because of the way things are changing, you're out there. Want to pick it up.
Buyers are getting more control. My point was the buyer is actually getting a voice. If you look at where the real estate market was the last 3 or 4 years, the buyer had zero voice. The only way to get the deal is just shot above everybody else and offer the biggest price.
As is, free deposit. Yeah, 3 weeks.
Yeah, right. Hey, full, deposit, non-refundable. I had one, man, it's crazy as this seems, Tejas. I had one seller that wanted us to give the EMD deposit, the earnest money, directly to them, not to the title company, not to an attorney. They wanted to hold EMD.
That's hilarious.
And you're like, no, you got it. What do you out of mind? I have no collateral.
Have they done real estate before? Like nobody.
No, they were hardcore, man. These were ballers, right? But they knew that the way the market, this is like 3 years ago, right? So the way the market was 3 years ago, they could ask for it. And you know what? Guess what, Tejas? They got it.
I believe
they got that, but we were head to head with another buyer. The other buyer agreed to do it. We were like, no, that sounds like crazy pills. We're not doing that. So the other buyer agreed to give the EMD directly to them, like to their company bank account.
Right.
Not getting that back.
No matter what.
Yeah.
That's crazy. So buyers have a voice. Nice to hear that. Nice to hear, stick to markets. What about, I want to encourage people to throw in lowball offers. I want, sellers to have to understand that the market's changing. I'm a broker and, I'm like, we got to go 75 cents on the dollar, get them out there. Enough offers. You're going to start like weaning something down.
I've been working with my acquisitions team a lot. I like the concept, the mantra I've been giving them. I think my Q1 mantra is stay on the dance floor, right? Just start dancing, right? We got a deal right now with it sounds like a bit of a rope-a-dope. Like as a broker, this probably would tick you off, but we're not going to, sorry, this is what they wanted.
Go ahead.
They want $20 million for this, reasonable sized multifamily property. We have not walked the site yet. They would not allow us to walk the site until I sign a letter of intent that says we're going to give you $20 million for that property, right? You know what I'm going to do? I'm going to sign that LOI. I'm going to do it. I'm going to sign it. I might not commit to the LOI. First of all, is just a piece of paper that says my intention is to buy your property. Right. And the LOIs would, in plain language, say we have not inspected your property, but based on the numbers you sent us, we believe it is worth $20 million, but I need to verify that through a site walk, right? That now I'm on the dance floor. If I sign that, I'm in. Okay. And nobody else is going to do this. And this is like an off the market pocket listing that the broker has. So now it's off the market. Now DeRosa is dancing and I can get my site walk going and I can say, well, 20 million, except for minus the new roofs that you need, minus all these busted out windows, and minus the 7 down units you didn't tell me about, and minus the, aluminum wiring and all these units or whatever. So now the number's now 17.5. But I'm dancing, I'm in the conversation. And so what I believe the winners are going to do is sellers and buyers are a little skittish right now. So if you can go in with a little bit of courage and engage the seller in a conversation and just try and get a conversation going, you'll likely land a conversation at a deal,
Yeah. And LOI just, letter of intent, it's very non-binding. It's literally a non-binding letter of intent. We put out hundreds of them because we have so many clients from out of state. And on the real estate side,
all an LOI does is you define a few of the terms you want to buy the property under. I think I want to buy it for around this price. This is what I'm willing to commit to EMD. This is about what my timing is going to look like on closing. And if they sign it and you sign it and everything else smells kosher, then it goes over to your attorney to draw up a PSA, which is binding, and that stands for Purchase and Sale Agreement.
Thank you.
And that is binding,
Right.
a binding agreement, and that's when the earnest money deposit gets turned over. The LOI,
But that
that's your first foot on the dance floor.
But that little bit of time being on the dance floor, you might meet the seller, right? You might be able to communicate with the seller and cut the broker out. I mean, not, I'm a broker. I don't want to cut the broker out, but you know what I mean? At least um, make it a human touch. And then you build a relationship. It's actually a polite way to ask, listen, I would have paid you that amount of money, but here's my 5 inspections. I paid a roofer. I paid this. And you got to take this seriously. It's not an unreasonable.
The best deals I've ever done were closed with me, the broker, the seller, and a beer.
Yeah.
Let's just sit down and
Break
have
bread.
a choice. Could be coffee if you're not, whatever. But let's just have some sort of a conversation, face to face, eye to eye. And the last couple of deals that I've done that went really well were those. Those that there gets to be misunderstandings and a little bit of get your dukes up or whatever, are those where the buyer and seller are not direct communication.
Yeah, agreed. It is like you're represented by an attorney, you're represented by a realtor.
Fine,
Yeah, there is a combative.
Looking out for you, but at some point it's also like, hey, man, this is what I'm out for. This is what my goals are in this transaction. I'm not trying to bend you over. I'm trying to just make a deal happen that works for me, my company, my investors, my team, my people. And likely the seller has got the same goals.
Yeah. I mean, he's an investor, right? We're trying to match up the dot the I's. Take me to like today. Like besides that deal, you have investors that you communicate with, or maybe investors that are just curious, like, hey, what's going on? Yeah. How are you talking to them, or what are you saying?
We send out a monthly newsletter. And in that newsletter, a lot of it is just highlighting the existing opportunities that we have. We tell them what we're up to, and I'm very clear with my investors. I say, listen, we are straight up, like, honest, not honest as the day is long. We're looking at new asset classes, and it's not that we don't think multifamily is the place to be, but multifamily has certainly gotten overheated lately. And I think that it needs that, 5, 10, 15% correction, for it to really start to make sense again, and for it to hit the ceiling that it needed to hit a little while ago and plateau for a little bit. So we are going to continue to move forward and have momentum. And we're looking at new construction multifamily. We're in the middle of building 2 apartment buildings right now.
Wow.
I just had a great call yesterday with a doctor's conglomerate that wants us to build medical office for them, and they would lease it back, and that's like a build to suit kind of thing. So we're looking at just different stuff to keep our trains running on time while we wait for things to come around.
So I love it that you're saying that, because multifamily has been the hottest thing in the galaxy for a bit.
But
so
actually, there's other things you can buy besides apartment buildings. And
but let's talk about that.
Yeah.
Let's talk about that. So like we're always limiting risk, trying to make sure there's a good reward.
Sure.
Why, just for somebody who doesn't know, like why look at a medical office building or ground up, or what is the limiting risk in that for to hedge for the future in that project?
Well, let's look at why multifamily makes sense. It's because it's something that a lot of people need. Everybody needs a place to live, and whether they're either going to own or they're going to rent, they need a place to live. As housing costs continue to increase and as interest rates continue to stay where they are, more and more of America is going to need to lease, and is going to not be able to afford to buy a home anytime soon, right? So multifamily housing is continue to be a necessity. As everybody talks about, there is a housing shortage in America. Not that there's a bunch of people living on the street that could afford to live in a house but can't, but we just, America's growing more than our housing stock is. Let's put it that way, right? So all those are why multifamily, but there's other things people need, right? They need to have their teeth worked on. they will. We have an aging population in America, so we will have people that have everything from lower back pain that need a chiropractor to people that believe in alternative medicine like stem cells and things like that. So there are medical facilities that use alternative types of medicine, everything from cryotherapy and like I said, stem cell therapy and things like that. So there are facilities that are needed for new age technologies or for to serve our aging population. You got to just follow where the hockey puck's going, and it's not just housing that America needs. We need that, but there's other stuff we need too. And so if you want to look at what is needed, you got to look at your market. So let's just say Lehigh Valley or whatever. You study Lehigh Valley and say, okay, the demographic in Lehigh Valley is increasing by this. This is the age demographic here. What if the average median age of the Lehigh Valley is 56 years old? It's going to be 57 next year. And so,
right.
What are those?
It's funny you say that. We have the hospital wars going on right now because we are a smaller market, but like all these folks, because people from New York and New Jersey, and exactly what you're saying is what is thriving in my market. Continue.
Medical.
Yeah.
You can't, I mean, you will be able to, and there are, like my sister is a nurse and she doesn't leave her house. My sister is a nurse from home, right? Awesome. Now, that is a more and more prevalent thing, but it's not going to be that's not going to replace physical, doctors. And also, you can't get your back cracked from home. You can't get a teeth cleaning from home. You can get a diagnosis, and so these things might take a nibble at the urgent care facilities. To like get a diagnosis or get like a prescription for some for antibiotics, but at the end of the day, there's going to be a need for medical and places to go get our hair cut, right? The Flowbee's not coming back. You're not going to be able to cut your hair with a vacuum cleaner.
I hope people do remember the Flowbee. I remember that thing.
I remember this. You and I are old enough to remember the Flowbee, right? But it's not coming back, right? So you're going to need to go to a physical place where a live human being is going to need to cut your hair. So if you see a rising demographic, yes, they need housing, but they'll also need other stuff that you can, as a multifaceted real estate investor, can be a part of the wave that's provided. Wise person gave me a great adage a while ago: you cannot change the market; you can only hope to participate in it. Nice. And so, what that means is study your market, see where the hockey puck's going, see what's needed. If they've got 35 self-storage facilities, maybe they don't need a 36th one, or maybe that's oversaturated. If you could read between the lines, my opinion is self-storage. But maybe there's other asset classes that they need more of. Flex industrial pages. Yeah. As we start making.
What does that mean? Pretend I don't know. What's flex?
Oh, sure. Flex industrial means a office space attached to a warehouse where there's people that sit in that office space that either sell or run the back end support or whatever to sell or make a product that gets housed or made itself, like a little making, like people can actually make stuff, believe it or not, in America.
Yeah.
What
a concept.
I know. We don't have to buy it from overseas. You can actually make it here. And so there's a sales force or a support staff that works in the office, and they support the manufacture or the housing of a product that exists in that warehouse. And there's the flex space is what it's called, is increasing double digits in America right now. As we start to Amazonify things, and as we start to buy more and more stuff local versus overseas. So you want to get on the real bubble, look at flex industrial.
I love it. That's like beautiful explanation as to why you should do your homework.
Yeah.
I hated that we don't have too much time. But hold on. I got a big one. So roaring 20s, right? There was 100 years ago. Things were crazy. Everybody had all these problems. And so now today, I think we're gearing up for, the best part of the future. We're really through a lot of the bad stuff. Yeah, there's going to be some issues, but like the world hopefully isn't blowing up anytime soon.
Hope not.
And so with that, what do you tell some of the folks that are listening that are a little bit depressed about all of this and, just want some motivation to kick up their business?
I've rarely seen anyone predict the future and get it right. So everybody's over here like, we're going to have a recession. You got people like my personal friend, met him a few times, Robert Kiyosaki over here, like the world's about to blow up and you need to buy Bitcoin or whatever. That's cool. I get that. But everybody's wrong when they predict the future because nobody saw COVID coming. right? Nobody saw the major changes. Everybody thought real estate was going to crash in like 2015 changes, right?
Yeah, yeah,
Guess what?
yeah.
It didn't. Everybody thought real estate was going to take it on the chin right when COVID came out. Guess what? It blew up. You
Right.
know, in hindsight, you look back on why these things happen, it makes total sense, right? But if everybody out there is predicting a recession, predicting like Chicken Little skies falling or whatever, they're probably wrong. you know,
Yeah.
the market's probably going to do the opposite of what everybody predicts. And if everybody's saying recession, my guess is that I'm not betting my poker chips on this, but my guess is that they're probably not going to call it exactly right. Maybe we're all going to hell in a handbasket and the whole thing's going to fall apart. But guess what? If it does, people like you and me, Tejas, will figure it out. And if it doesn't, we'll figure it out too. What I have faith in is not predictions. What I have faith in is that the people that I know and trust will figure it out. And if you're sitting around waiting on the market to change, it'll keep changing. And you just got to have faith that you'll figure it out. And that's what I found has worked for me over the years. Is I just
I love what you're saying, and I'm gonna slam it with this. We're in the oldest business on Earth, right? Like, historically, this is, and you mentioned crypto and you mentioned stocks, and I used to have a bunch of marketing that was like, "Hey, our fund outperformed," blah, but it's true. You're sticking to something that is real, natural.
what
This
I
is
know. I was
right.
talking to a buddy on the treadmill this morning. I was like, man, I kind of miss like Bitcoin's back up again. And he's like, do you know Bitcoin? I'm like, no. He's like, yeah, what you know. Yeah, because I get FOMO, fear of missing out, right? I'm like, man, I could have bought Bitcoin at 13 and it's traded at 22 right now, man. And he's like, yeah, but you don't understand it. And I was like, yeah, I don't. Right? And he is, guess what? Nobody else does either. So
Right. Right.
they just understand it goes up and down. Right?
Yeah. Listen, I hate it that we're coming to time. How does somebody get a hold of you or invest with you?
They can learn from us, invest with us at DeRosaGroup.com, and we have masterminds. We do retreats at our multifamily apartment buildings out in the field, so you can join us for a site walk. We've got a Bigger Pockets boot camp coming up. All those things you can hear about, and you can also hear about investing with us at DeRosaGroup.com, DEROSA, DeRosaGroup.com.
Thank you, man. I love you. I appreciate
Love you
you.
too, bro. Thank
I
you.
wish you the best, and let's get through this year.
Good to have you back on. That's all, because we
For
got cut
sure.
short. You'll just have to do it again. That's it.
For sure. Everything's in the show notes. Tejas Gosai, Matt Faircloth, the one and only, rei.mba. Cheers, guys.